Hi everyone, welcome back to this week Weekly Market Update. As usual, we'll take a look at what happened on last week, take a look at what we have done to do some recap and also to see what is coming up for next week as well, to prepare you for the next week trading market as well. So let's see what happened on last Friday. We know that the market plunged badly on Friday closing, down dive 800 point, S&P 500 post-week worst week since January after the inflation hit 40 years high. What do we mean by that? Last Friday, which I mentioned on my last week video, the most important thing is on the Friday CPI's earnings reports. Correct? Not the earnings report, CPI's reports. So we can see that the market actually fall badly, sank to don't know how many week high, how many week low, after the report came out. Why? Because the inflation rate is way higher. I mean, the CPI rate is way higher than what the expectations are about. So you see, the report showed the price raising 8.6% year to year. So this is what happened to the CPI on last Friday. It's the highest level since 1981, and it putting pressure on the stock market. Which I mentioned before in my last week, what happened, because if let's say the CPI is higher, it gives the Fed more reasons to even increase the rate higher or faster in the pace. Correct or not? So this is what they expect 8.3, and it come out pump 8.6 on the record itself. So this gives the pressure to the market and to the investor fear that Fed will continue to increase the hike coming this week again. So this coming week eventually there's a rate Fed meeting again. I think most likely another 50 basis points will kick in once again. So this caused the market to be turned very bearish on last Friday itself, caused the market to drop. Not just only on that, you can look at what happened to the VIX, it just came out, and look at what happened to the 2-year Treasury yield, which is the most sensitive to the Fed hike, actually jumped above 3% on Friday to its highest level since 2008. 2008 is our global financial crisis, whereby compared to now, if let's say it's similar, what is happening to the GFC will be happening to us again. Alright, so this is all the bad news, and definitely technology is actually putting under pressure. Netflix dropped more than 5% after downgrade from Goldman Sachs, and Nvidia slide nearly 6%. Not just only that, Apple, which is the big company as well, slide down as well. So this CPI record is actually very sensitive. Everyone is looking at it because we know that we are actually at a high inflation. It might turn to the recessions very soon, and this CPI record is a step by step telling us what is happening to the market. Take a look. If you realize, if you pay attention, Fed has actually raised a 50 basis point interest rate on the last month itself. But raising a 50 basis point doesn't really cool down the inflations, it turns even higher. So does it mean that it gives Fed the reason that, or another evidence, they are allowed to raise another 50 to 75 basis point coming up this week? We will know. But for 50 basis point, I can say 80 to 90%, or perhaps 100%, most likely it will turn into it. Alright, so this is what happens on next week. Take note, take note, Fed will raise the rate in the weeks ahead. So this is what happens. Coming week, there will be a 2 days meeting again, just like what happened last week. Another 50 basis point may kick in. Alright, may kick in. So if you are holding on any shares, you may want to hash it. Like I say, since the chart, right, you only at current situation, the whole market is changing. It's unlike what happened to the during the pandemic, during the COVID pandemic. No free money pumping in, no low interest rate. Right now we are at the inflation. They need to control. That is their main priority. We have to increase the interest rate to bring down the inflations. This meaning to say we are actually end of the expansions. As is, everything is coming down. If you go to the cycle, you can see. What do I mean by cycle? If let's say you go and see the chart cycle right now, expansion go up, contraction come down. All right, so we are actually at this cycle right now. So there's no way that there is any chances it will go higher, this kind of thing, or form double top. Is over. All right, so this is the weekly chart. You can may see that this is a top and shoulder or whatever. Break the neckline right now. Break, test the supporter resistance. We are another leg to down. All right, we are another leg to down. So Never ever catch any stock at this time unless you are doing short-term trader, intraday trading, which I did as well. I got some profit, some losses, but this is what you want. But definitely, I did mention in my Telegram group, if I inside, how do you play on last Friday CPI before there's a huge drop, right? So you look at the day chart, there's a huge drop, right? There's a huge gap. So we go into, can you see, this is my Telegram group, how to trade Dow Jones for the CPI data tomorrow. All right, this is what I mentioned. Dow Jones is ranging between this level. There's 3 trading plan you can play. So people who took the first trading plan, congratulations. I will take profit 32,000 or even lower on last Friday closing. Can you see that or not? All right, so this is where I shared on the 9th of June. Uh, 9th of June is here. All right, this is what I shared. So people who actually short it, when it near 33,000, congrats to you. Then it come down all the way. Okay, so if you never join my public Telegram group, just be it. If you don't want, I will force you. If you join, hopefully you benefit. Hopefully for the viewer who actually saw this message, actually benefit from shorting of the Dow Jones to hedge some of your positions or to profit from it there as well. Okay, so rate hike could be a cause of recessions. Okay, cause of a recessions. No choice. I tell you, no choice. The market have to cool down after 10 years of bull or 12 more than 10 years of bull. I can say that. All right, so this is what we have to take note. Recession warnings, you guys can read. This is what I mentioned. 2 years, you reach 3.0%. All right, so it's almost causing an inverted curve, which a recession will signal because the 2 years to the 10 years. All right, curve, inverted curve. So next thing to watch out, if let's say you are in Tesla far for a 3-to-1 stock split. Uh, the first stock split for this month, or perhaps for this year, is actually Amazon. It's not doing well as well. Subsequently, Alphabet is also coming for a 20-to-1 stock split. Don't think that every stock split historical will bring you a good price. After stock split, the stock will go up. All right, so don't have this misunderstanding. Yes, definitely historical is show more up than downside, but we are actually at a different situation right now. All right, so Tesla stock split, is it a good thing? I don't think so. I don't think Tesla is a stock split is a good thing. Because Elon Musk sell off many shares out there. First round to sell shares for tax, second round to sell shares for Twitter acquisition, but we fail. Basically, he just run off from the market. If you realize, all right, he's not holding any shares. His stock split, he wait for the price to go even lower, way lower, and then he grab again. Okay, so if you want, you enter after he buy in. If there's any news, don't enter before that. All what he said, uh, up to you to believe. All right. Next, this is all the recession. I'm not going to share much. Okay, inflation rate rose to 8.6% in the May, highest since 1981. So a lot of things, food, gas, energy price is all contribute to the gain and fill up the 106.7% over the past year. We know that commodities is the last leg to go up before it come down. So when it come down, the next up leg to go up is actually the bond. But for that to come up, I think we still do need to have wait until perhaps end of this year. So we still got 6 months to ride. It's not easy after uh sell in May go away, June we should be come back. No way, we are coming back. So don't be naive that the market is going to come back anytime. All right, if you never follow my Telegram, you should also follow my chart, follow my Facebook page, read my video. Otherwise, you won't even know this video, right? Which I mentioned. Good news from NFP will bring more rate hike confirmations. Right with the trend and short when it go higher. That is your priority. Don't think there's a big profit coming to the top of the channel for you to buy in to earn some quick profit. No. It's either you come here, wait for it to short down, or you short, and then there is a stop loss. It's always 34,500. Correct or not? This is always I mentioned. Any above 34.5 won't be good for Mr. Bear. Where is Mr. Bear? We are getting further and further from Mr. Bear. Since 27 May, which I post over here, if you short it at any point over here, this whole circuit area, all right, and you just put a 34,500. Yes, your risk is higher, but right now, where's your reward? We are looking at. We may go even higher we may hit my final level, not the final level, okay, before this whole thing have some kick in, we are looking at 30,000 first. I'm just like the round figure, psychological level, that is what I'm looking at. Not even 31,000 at this breach on last Friday. Definitely 31,000 is meant to go. Alright, I can confidently say that 31,000 is meant to go. Unless Fed come in and say, oh, no. But trust me, the data is there to be proven. Evidence is showing. Alright, 31,000, no way. 30,000, yes. So another 2,000, what is the last question? Another 1,003 down, nothing is 1,003 to down. Alright, trust me. Alright, so it's easily for them to hit 1,003. Not a good sign. If you're holding shares, please run as fast as possible. Alright, next thing, another things to break down is Bitcoin. I tell you, cryptocurrency is not going to survive in this high inflation rate. It's not going to survive. Alright, this is where the market is, everything is good, pictures is nice, free money, low interest rate, everyone nothing to buy, they just speculate. Yes, Bitcoin, cryptocurrency, NFT is where you go. I'm not supportive of NFT in crypto as well. This is why I mentioned immediate support at 28,000, drop below. We may see 25 over the weekends coming during this weekend. We can see that it break 20, 28, 25 is next. Otherwise, it's 20. I think this whole Bitcoin might crash when the market crash. All right, it may crash faster. You can't even have money to buy food to eat. Why do you want to go into cryptocurrency? True enough. All right, so next, a lot of people paying attention. Why? Because another leg come down is actually Ethereum. Ethereum, can you see that? It's worse off. This is what I mentioned previously. Handcuffs there. We play all the way up. Right now, just one right. We are back to square one. I'm not surprised if it come to 1,000. I'm not surprised if it come to here. 1,003, 1,250. I'm not surprised at all. Alright. Yes, high chance it may drop. Not to forget, we are always trading with the trend. Alright. So any pullback, any pullback, any U-turn is for you to coming down. Alright, if you want to buy low, you want to pick up high, please ask these questions. Why you want to buy cryptocurrency, dollar averaging to buy on it? Yes, you may believe that cryptocurrency is the next future, next generation. Think of it. The base where we have is actually the stock market, which is running with company, with profits, with earnings, which is can be calculated. Uh, all the good shares is dropping crazily. Why you don't want to do a stock pick over there, but you want to pick on cryptocurrency? All right. Uh, I don't know. It's up to you to convince yourself. So 160, nah, not going to support. 180, worse off. Support the resistance. 200, come down, pump. I think next 120, likely. Yes. All right. So just be worried. Be careful of your own position. Next counter, which I mentioned, I even write in my Facebook page. If you follow, you follow. If you don't get it, you don't get it. Okay, this is what happened on last week, 4th of June, which is last week report. We are at the high. All right, we are at a high. Can you see a symmetrical triangle, which I shared? Oh, so sorry, which I shared. I don't know whether I shared, but I write in my Facebook page. All right, what I wrote rate hike bring no good to utility sector because they are high debt. All right, they are high debt company with high of interest rate. They are there to go. Okay, so this is like a fake. To me, it's like a fake. It cannot be. Making is the breaking is because of this ascending triangle. Yes, technical terms it break. Come down, support term resistance, go up. If you feel to take the next top with an interest rate hiking of this coming week, you should cash it somewhere after the 4th June, 6th June open. If you short it, your stop loss is somewhere above. You got a fat meat over there. All right, so I don't know whether how many of you cash it. If you cash it, it's yours. If you don't cash it, then remember to follow the next trade if I shared. Okay, next thing, over the last week we know of, last 2 weeks we know that things is doing good is actually the Chinese related ADR shares, like Pinduoduo, Baba, this kind of company. Eventually the whole market come down, they will come down. But we can see that there's a lot of uptake because China is cooling down on the regulations. I think a lot of news coming up for ADR Chinese. So that is why it's kind of like good for Hang Seng Index. is also coming up. We mentioned that 20,000 is a takeover, right? Yes, definitely. If let's say whole world is experienced inflations, UK, Europe, US, Chinese is about that as well. But the shares, the money have to do some rotation, right? So we are hearing more on the inflation on the UK, US side. Rate hike is on the US side. UK side, even for Australia, high 75 basis point. If I'm not wrong, I was so surprised. But the market crash. This is what I shared. This is my share internally lah. I share internally. I didn't share in the in any of the video. I share internally. Australia 200. You can see the market crash. Okay, where we do technical analysis or where we do fundamental, right, everyone got their own book to follow. Everyone got their own basic theory to follow. One of them is do not fight against the tip, which I mentioned, right? After raising 75 basis point, what do you want the market to go? Go even higher? No way, right? There's no way it will go even higher after a 75 basis point. So it's just a blindly short, which I did. Shorter somewhere here, it came down, you get the free money. And right now, US side is coming down, I think it will break the neckline. So this is what we are looking at Australia. I hardly share this kind of Australia stocks index. Doesn't mean I don't monitor. I do monitor, but my preference is still on the US side. But I do monitor what is happening to the so-called the big market out there. All right. So I think this neckline 6,700 is not going to hold. There might be some huge drop. Yes, uh might have some rebound before it come down, or might rate reverse just like what happened to the US side. This is one, two, or whatever three scenario, but one big scenario we know is a downside scenario. Okay, it's either you want to have a highest profit, you long when it go up, or you are one more confirmation it break, you go down. That means you short it down, or you wait for it to come out, you shut it down. Whatever play is only one direction, downside. Okay, but why I don't really choose there's many for you to short index like Nasdaq, like Dow Jones, like S&P 500, but I don't really choose Australia to say previously. It's because Australia is more on commodities company. Commodities company is going up, the company earnings is going up, the index will actually go up. So it's something like resistance. There's one leg is stopping the force to come down that fast. That's why I didn't mention at the point of time. But 75 basis point, that's why you see where the market is coming down, they don't really come that fast lah. Okay, so that's why take note Australia is more on commodity side lah. Okay, next we are looking at China A50 second half. Market reopened. I mean the breakdown reopened. It might give some bullish sign, but overall it's still da. Okay, so but I kind of like it on the Chinese side. When the US side is crazily facing those kind of inflation interest rate stuff lah. So that is why I shared one of the ETF HST in my last video. This is what I mentioned, and where are we right now? Take a look. Okay, 4th June. Oh, sorry. 4th June opening resisted resistance 90 cents, support 64. Take a look what happened after 6 of 4 market break up 77 cent break up 80 cent pullback up. Alright, I think 10 cents. I think all companies doing good. I see this may hit 90 cent. All right, so of course, that is what I've shared last week, and today just a recap. Any good things, good stuff to share for this week? For individual counter wise, I'm not touching it. At the moment, not touching it at the moment, even though I shared this counter, I think last week. All right, it have some movement, but overall risk is not there. I mean, overall risk is there. So that's why if you want to pick or people who pick it up, congrats. But I don't want to continue to share this counter because the market is really weak. Even for strong counter, right, it may be caused by the whole downturn, cause it to go weak again. But I still bullish in this counter. All right, I still bullish in this counter. So if you are into it, if you have entered, just respect the support and resistance, just hold it till all the way. All right, so that's all for this week. Oh, last thing. So sorry, last thing, not to forget, this Friday is a quadruple witching on the options. That means all the options will expire on Friday. So what it will cause, derivative will expire at the same moment. Trader offers seek to close up all their position in advance of the expiration. So this will it cause a bearish market? Not really 100%, but what it will cause is actually the intraday volatility. All right, so more movement. You can see 300, 400, 500 point movement on next week. We will know, especially during the Tuesday, Wednesday, and the Thursday, Friday itself. So people who are risk averse, stay away. People who want to protect your own portfolio, remember to do some hedging in the options market, in the CFD market, or do some correlated, inverse correlated. So one thing go up, one thing go down, this kind of thing. All right. So hopefully you guys manage your portfolio nicely. Watch out on your positions. Watch out if you're using margin. Just be careful. That's all for this week sharing. Hope you guys enjoyed. Take care. Stay safe. Bye bye.